Good afternoon and welcome back to Moneycontrol's live stream. You're tuned to Closing Bell with me, Lovisha Darad, and joining me my colleague Yatin Mota. Well, Yatin, quite a choppy session despite we started well ahead in the green. Sensex was off by about 400 points from its day's highs to settle with nearly 200 points gain, and Nifty also trimmed about 100 points from its day's high and settled above that 24,650 mark. But the market breadth was positive, advanced decline ratio 2:1, and broader indices continue to exhibit resilience. Not only resilience, but they also outperformed the headline indices. So that excitement is definitely there in the broader end of the pockets. India Wix, the fear gauge barometer, that has continued to ease, 5% cool off today also, and on the sectoral front, metal index stood out to be the star performer as US and India inflation prints turned out to be better than expected for the month of April. On the contrary, if we see Bank Nifty and the Nifty private banks also seeing a cut of about 0.2% or so. FMCG also saw a bit of a setback but settled positively, flat in the green at this point of time. Yatin, very quiet close, and given the surge we've seen in the Hang Seng index, the FII tactical move is something that we need to be watched out for.
Yes, I think so. And if you look at the markets today, Lovisha, like yesterday, the advanced decline ratio was good. The market continued to remain volatile, but the advanced decline ratio was positive. In fact, today also the advanced decline ratio was almost 4:1, clearly indicating that despite the market volatility, mid-cap stocks and the mid-tier stocks are doing well. In fact, both the mid-cap and small-cap index were up between 1 to 1.5%. Also, talking about the performance of the sectors, real estate, energy and metal stocks continue to shine.
That's right. Let's take a look at some of the Nifty 50 gainers and losers. Well, Tata Steel seeing a gain of about 4% or so after brokerages did cheer its Q4 results. Yesterday, we saw that Tata Steel had cooled off of its Q4 performance, but today brokerages were impressed by its Q4 capex guidance as well, FY26 capex guidance. Coming to the rest of the stocks, some of the stocks which saw cool off yesterday, today again resumed back. Shriram Finance with about 3% gain, Hindalco, Eternal, all of them saw about 2.5 to nearly 3% gains as well. Defense stocks continue to seeing buying interest. Bharat Electronics seeing a gain of about 2.5% as well. On the downside, however, on the Nifty 50 losers pack, Asian Paints seeing a cut of about 1.8%. There are some reports which is emerging that Reliance is expected to divest its entire stake in the company. So we can see the sentimental reaction which is playing out on the counter as well. SIPLA also a 1.6% cut, not reacting well to its Q4 results. Tata Motors also Q4 March quarter performance, brokerages are not impressed by it, 1.2% cut which is coming in there too. Other than that, we can see Kotak Mahindra Bank and NTPC, both of them on the Nifty 50 losers pack. But definitely the headline today, once again, like yesterday, it is the broader end of the markets. Good excitement there, good moves from the mid cap and the small cap space, both of them outperforming the headline indices. Yatin, what are you gathering from the broader end of the markets?
Yeah, so the broader end of the market, Lovisha, as I mentioned, is doing well. If you look at today's gainers, again, stocks like GRSC post the numbers, that stock moved 15%, HBL Electric and Engines, that is one stock which moved quite well. In fact, they got approval for, the railway safety system, which is Kavach. So that stock moved after that, 12% higher for that one. Railtel, that is one stock which moved 9% in trade. Ircon, Kochi Shipyard, Nuama Wealth, AB Capital, SAIL, HEG, a whole host of these mid caps are doing well in trade. What was not doing well in trade, that was Sirma SGS, 8% down post numbers, Metropolis down 5% post numbers, and REC, after they have mellowed down their loan growth guidance, that stock also saw a 3% kind of a cut.
That's right. Now let's break down some of the stocks that were in focus today. Tata Motors, as I was mentioning about that, it was one of the top Nifty losers as well. We saw that the company's net profit fell about 51% year on year, and total revenue from operations increased very modestly by about 0.4% year on year. Now, what led to the fall in the share price was the management's guidance of an uncertain environment due to tariff and geopolitical situation, which weighed on the investor sentiment as well. Also, the weak near-term outlook and the muted demand for JLR also added to investors' concerns. Another big overhang for Tata Motors also emerged is your muted performance from the CV segment, which is your commercial vehicles. They've clocked reasonable utilization levels in the transporters. However, increasing competition from railways and a high base indicate a limited room for growth in the near term. That's what the brokerages have been pointing out. Brokerages, as a result, they raised concerns about the overall profitability, and some of them also cut the target price on the counter. For instance, your Nuvama cut the target price for Tata Motors to about 670 rupees per share from 720 rupees share, and they retained the reduced rating on the counter as well. On the other hand, Motilal Oswal also maintained a neutral stance on the counter and trimmed its target price by about 3% to 690 rupees per share. Now, what analysts at Nuvama are saying is that the discontinuance of JLR models, loss of market share in China, and tariff implementation in US are the primary and the key challenges for Tata Motors going ahead. On the other hand, Motilal Oswal expects another 100 points decline in margins between FY25 and 27 as the management refrained from giving out guidance for FY26 due to uncertain macro environments. Yatin, if you look at 1 month performance for Tata Motors, the stock has seen a decent run up, 15% or so. But today it reacted very negatively to its Q4 performance and of course what the management had to guide as well. But US and UK trade deal, that is something that we could be watching out for, and any re-rating for further ahead as well.
Yes, and I personally spoke to the group CFO, P. Balaji at their headquarters in Mumbai. Tata Motors is of the view that yes, the short-term environment is quite uncertain. However, trade deals once they happen probably will take off the uncertainty. China as a market in terms of volume growth has stabilized. US is down. However, they are expecting that the other markets, including India, should do well. Obviously, as you mentioned that there was some uncertain guidance. Plus, the investor day will happen somewhere in middle of June. So till then, I think investors will be doing their guesswork as to how really earnings and uncertainty moves. But yes, Tata Motors, one of the stocks in the auto space, clearly has been underperforming the other auto stocks as well.
That's right. Let's move on to another stock in focus. That was your Bharti Airtel, because that stock reacted well to its March quarter performance. The stock did soar to about as much as 3% in intraday session, but it settled with about nearly a % gain at this point of time. We saw that the telecom major reported about 77% year-on-year jump in its adjusted net profit for the fourth quarter, which excludes your exceptional items. And revenue for the quarter rose about 27% year-on-year, which was driven by strong momentum in India and the full quarter impact of Indus Towers consolidations. If you see the India revenue specifically, the revenues increased by about 29%, and mobile revenues also rose, which was supported by tariff hikes as well. ARPU also saw a good improvement to about 245 rupees at this point of time. Now, what the brokerages have to stay on Bharti Airtel, Morgan Stanley has shared an equal weight rating on the counter, and they believe that the India business has outperformed expectations, particularly in the Airtel business segment. CLSA has also maintained its rating, and they have kept an outperform call on the counter, while Motilal Oswal has reissued its buy call. Yet, if you look at 6 months charts for Bharti Airtel, they speak quite well, and now brokerages have given another 9 to 10% potential upside for the stock, which is again a good plus for the counter.
Yeah, good plus for the counter. However, at high levels there was some selling in Bharti stock. One thing that I noted down for Bharti numbers is the ARPU remained flat sequentially. However, there was growth in ARPU for Jio, and obviously Vodafone's numbers are still pending. But overall, it seems that the India business updates were not that great. However, the consolidated numbers were good because Airtel Africa performed much better for the quarter.
That's right. Now let's move on to another stock in focus. We have the pharma name, that is your SIPLA, and one of the top Nifty losers as well, after the company did post its March quarter performance, and brokerages weren't exactly thrilled. While we saw that the net profit saw a healthy 30% year-on-year jump, revenue rose about 9%, and analysts flagged concerns around what lies ahead. For instance, your FY26, the SIPLA's management is guided about for an EBITDA margin which ranges about 23.5% to 24.5%, but Elara Capital pointed out that this actually signals a margin contraction of about 140 to about 240 basis points compared to last year. Even more concerning for Elara is the company's revenue guidance, which they say hints at a flat to low single-digit growth for the company. As a result, the brokerage has downgraded SIPLA from accumulate to reduce and has slashed the target price of the counter too. Motilal Oswal also wasn't a beat on the counter. They also stuck with its neutral rating and trimmed the target price, citing muted expectations of earnings between FY25 to 27. Then we can see that the upside could be capped for now, given that there are certain near-term headwinds and there is a tepid growth guidance which is awaited for SIPLA as well.
Yeah, I think, when it comes to SIPLA, I think the street was slightly disappointed with the margin guidance, and especially when you have Revlimid as a blockbuster drug which has been giving results for the last 4 quarters, that, base effect is also there. Plus the, Revlimid benefits also for most Indian pharma companies seem to be now done. So yes, in absence of a blockbuster drug or, a probable slower trajectory for US sales, there was some bit of concern from the analyst community when it comes to the overall numbers for SIPLA. Apart from SIPLA, another stock which took profit taking in trade today is SRF. Now, SRF from the recent highs has fell nearly 7% in trade. More importantly, post the numbers, we saw some profit taking. Why? Because the 3 key segments, only the chemical segment performed. Gross margins were slightly under pressure sequentially. And more importantly, the management now expects higher competition from the Chinese competitors. So yes, the competition is increasing, and the dependence on the chemical sector, especially the refrigerant gas space, is something which the analyst community have now turned cautious on. When it comes to other announcements, do remember that today Chemplast Sanmar also announced that they will be entering into the R32 gas space, which is a key product for companies like Navin Fluorine and SRF. It is a refrigerant gas used for the refrigerator and air conditioners, and rising competition domestically as well as from the Chinese counterparts has led to some bit of profit taking, despite the fact that the management guided for a 20% growth in the chemical sector. Mind you, SRF stock is now trading at 56 times FY26 earnings, so not cheap as well.
That's right. All right, with that, we've come to an end of this edition of The Closing Bell. It's a wrap from Yatin and me, and thank you for watching.